Hello students, welcome to this session. Over here, last session students, I think there was some audio issue at the end when we were discussing about the set off provision. I'll just quickly will run through that particular part for all of you, and then thereafter students, you all can begin. Now students, if you see very carefully, what we have discussed was that up till GTI students, see what happens after the 5 heads of income that has been computed. After the 5 heads of income students that has been computed, then thereafter, what happens? Then thereafter, I told you that we have to do the clubbing provision. We have to do the clubbing provision, and also I have told you the entire clubbing provision genesis. All the what we have discussed about the clubbing provision, I told you 60 to 65, and also more importantly, I have told you the fact that so far as the clubbing provision is concerned, the most important part which I discussed was that it is a specific anti-avoidance rule. What it is? Specific anti-avoidance rule. Reason, logic, everything was being shared with all of you. Then I told you in this book one, first book, you also are going to learn the general anti-avoidance rule. That is primarily which will be discussed in the booklet one now. Thereafter, students, once the clubbing is done, then I have gave you students the range of the section from section 70 to 80. The range of the section I have given to all of you, which was from section 70 to section 80, isn't it? All of you are aware of that or not? Now that 70 to 80 was about the set off or the carry forward and set off of losses. Now I was just telling a bit of a background in this regard, and the background students that I told to all of you in this context was the fact that there was this particular incident that happened in UK some 200 years back. As you all are aware, students, that the rate of tax is 30%, means the higher rate is 30%. So therefore, one trader in UK, he realized the fact that the government is in my economic activity which I do in the previous year. What the government does? The government comes to me in the assessment year and they ask for their share. They ask for what? Their share, 30% share. So technically speaking, government government is what? Government is the partner in your profits. Technically, students, the government is a partner of your profit. Isn't it? That is what it means. Every year you earn the income, and in the assessment year you have to pay 30% of the tax. So effectively, government becomes the partner of your business to the extent of 30%. In one of the year, he got a loss. And because of that particular law, students, because of that particular loss, what happened? In this case, 30% of the loss now. 30% of the loss he asks for reimbursement from whom? From the government. 30% of the loss he asked for the reimbursement from the government. He said that he said that every year when I'm getting a profit, in those years you are taking the tax. So once I get a loss, then in that year you should be repaying that 30% share. It is your share. You please repay me. The government said that no, how can we do that? The government only understands to recover, not to pay like this. This person accordingly went to the UK Supreme Court, finally. And the UK Supreme Court, students, the House of Lords, in UK they say House of Lords. What they have said? That going by the principle of equity and natural justice, going by the principle of equity and the natural justice, if in the year of profit the government compulsorily recovers from you 30% from your total profit, then obviously in the year of loss the government will have to bear their share of loss, which is 30%. Therefore, government kindly give the refund. This judgment was the historical judgment, universal. Historical. Why? Because it sent not only to UK, across the world, everyone came to know what is going to happen tomorrow. And then, obviously, the judgment happened in UK. Immediately, UK did what? They made a law. And the law said what? Look, we will not give you any refund. Don't expect that we should be giving you any refund on the tax. On the contrary, what we will do is that we will allow you to carry forward your losses, and in the subsequent year when you make a profit, from that profit you adjust your earlier year loss, and thereafter the remaining profit on that pay the tax. This is what we can do. But don't expect that the government will grant you a refund. That is not possible. That is not possible. This therefore became a law across the world. In India, we have from section 70 to section 80 provision dealing with the set off or the carry forward and the set off of losses. So this is the provision which deals in this particular manner. I hope that all of you are clear with this one. So students, now then we proceed further in this regard and we go to our next particular segment. So after doing the set off, students, after doing the adjustment for the set off, what is that you get it? After you do the adjustment of set off, students, what is that you get it? Quickly. After you do the adjustment of set off, what exactly you get it? You get the GTI. And from the GTI, you are providing the deduction for chapter 6. Very quick point, students, I'll tell you about chapter 6. Students, yes, Ramkumar. If you see, students, what is this deduction of chapter 6 here? Always keep in mind, this is very important now at finance year. Now you have to be very careful. Students, there are some deductions that you get. Some deductions, students, you get under the head PGBP, under every heads. Every heads of income you are getting some deductions. And then there is a deduction that you get in chapter 6. There is some deductions that you get where? In chapter. Some deduction that you get where? In chapter 6. Isn't it? So some deduction, students, you are getting it here. And some you are getting where, students? in chapter 6A. Is that point clear to all of you? In chapter 6A, students, you will find that deduction is of two types. In inter-CA, students, you people have learnt ATC, ATD. These are the deduction on expenditure. What are they? These are the deduction on expenditure. In final CA, more dangerous sections are there, which is ATIA, ATIB, 10AA. These are the deduction not on the expenditure but on the income. Chapter 6A has got a split of two. Which is that two? One, deduction on the expenditure and the reduction on the income. On the income. Fine, students. So this is what it is. Very quick point. Because I definitely after this I will not be getting any opportunity to speak about it. Let me tell you right now straight. In this case, students, remember what happens like in US, in up till some now they also are feeling a stress. Their economic is also going in recession. But just some time before, in US, students, if you are a tax-paying citizen, then the government rewards you. Government is rewarding you. In what way? Supposingly, you retire, post-retirement, may not have your income, government will take care of you. It will give you those pensions. Because till the time you were active, you were working, you had been making the payment, you had been making the payment of the taxes regularly. Now you are our responsibility. Because now you are no longer in a position to, you are at the end phase of your life. So we will take care of you. Your medicals, your pensions. In fact, there are something unemployment allowance also. Supposingly in between of my service, if I get unemployed, for those period where I am unemployed, I am getting from government unemployment allowance also. What the US government respects for a tax-paying citizen. Is it possible in India? These measures, is it possible in India? With 140 crore population? Answer is the government says that yes, we appreciate the fact that you are a tax-paying citizen. We really respect you on that. But don't expect that we will be taking care of you. Because we have got the other part of India also to be taken care of. It is virtually impossible for us to really do this kind of a scenario. So therefore, what they are saying to you students, in a way, what they are saying students to all of you, they are saying to you this, that you do this expenditure, you prepare for your old age, get into the pension, provident fund, contribute in PPF, start making the payment for your medical bills, medical premium, insurance, take the insurance. Then what we do in that case, we will, for your expenditure, will give you the deduction. So don't expect that the government is going to take care of your old age. That is not possible. Your medical bills, not possible. Your higher education, not possible. But you do this, and we will do what, students? We shall then give you in chapter 6. This is the philosophy. It's actually what something which the government should have done, but you actually are taking out the government responsibility and and what? And you are incurring the expenditure. For that incurring the expenditure, the government gives you deduction. This is what it is. Therefore, students, this is what is the philosophy of chapter 60 deduction, and then you get your total. Is that point clear to all of you? Any doubts on this? So students, now then, again I'll repeat you one last particular point. Be careful. I told you earlier also, we are in a, for an individual, we discussed in the last lectures. What is that? We are in a default tax regime. We are in what? In a default tax regime. And being in a default tax regime, since all of you are aware of the fact that what happens, there is a rate slab which is given to you. I told you about those slabs. Slab is constant on the default tax regime, and the slab remains constant irrespective of the person being irrespective of the person being what? In senior citizen, super senior citizen, resident, non-resident, we don't care. 3, 6, 9, 12, 15, and then from 15, 30%. In fact, did you right now realize how much would be the tax that would be payable up to 15 lakhs, because the paper is lengthy and the total income of that individual is say 50 lakhs? You think that you will be having the luxury to calculate the slab? The slab is long. Up to 15 lakhs. How much is the tax? Quickly, you should know this particular part. Every one of you will calculate up to 15 lakhs. How much would be the tax amount? Quickly. How much is that? 1,50,000. All of you agree with this, students? Therefore, students, in this case, what you should do in this regard is this, that now henceforth, students, all of you keep this point in mind. Henceforth, students, all of you will keep this particular point in mind. Questions are lengthy, paper is lengthy. Students in final CA, in the old course I know, they struggle to complete the paper. New course, we are not aware of the pattern, but I assume it will be lengthy. Let's make two things, students, very clear. Huh? Your May 24, November 24 paper is going to be very difficult and the paper is going to be very lengthy. Let's prepare on that basis. I have prepared your module on that basis only. You would have noticed the module would have seen a most exhaustive particular question, students. Even November 23 RTP, everything is covered. So keep in mind, part work, part calculations are advisable in the examination. Total income say 50 lakhs. And the question is of default tax regime. You should know up to 15 lakhs, the tax is how much? 1,50,000, and thereafter the balance from 15 to 50, it is 30%. So on 35 lakh, 30%, whatever it is. And then surcharge tab remains the same, so we don't have to worry about it. And check for the rebate, but rebate would be only when the 7 lakhs what is given to you. So students, the default regime is an important one. So always keep in mind now, going forward, before now starting hitting the first chapter now for all of you, the non-resident taxation, and I'm starting with that. But before doing this, students, again, keep in mind this important observation, all of you. What is that? Yes, sir. Two things which I told you, which you have to keep in mind. That is, one is the question in the question for individual. The 2 point, one is the default scheme and another is the optional scheme. And what happens here? The rate wise, to conclude, students, the rate is different, or may I say in this way, the rate and in the total income. And please be careful in the total income. Right now, we are not interested, but I'm just letting you know, just a revision point. This you cannot afford to forget. And what is that? Few deductions from every head will not be available. Few deductions from every head will not be available. Not available. Okay. And more important difference herein, chapter 60, only few deductions available. Which are those? We will see later on. Right now, I'm not interested. Only few deduction is available. And the rate, as you know, special income, special rate, and balance total income at the slab rate. Here the slab rate you all know. 0 root 3, 3 to 6, 12 to 15. You can just complete this one. So I hope that 9 to 15 and 15 above. So that just a this is revision, students. The optional scheme, total income, the rate, total income would be as per the regular provision. Rate is special rate, special income, special rate. Special income, students, writing special rate, balance total income, slab rate as per slab rate, balance total income, slab rate. Now slab rate, students, you can write below this. What do you write below this? Rate on the basis of whether the individual is senior citizen or senior citizen or otherwise. You all are through. Slab rate, I have told you. Below slab rate, you can write rate depending upon whether the individual is senior citizen, super senior citizen, or otherwise. Shall we proceed further? Students, all of you through? That note, students, going to hit upon to the non-resident. Why the non-resident taxation critical? Because you have also learned now Be careful. Remember, the charge is on the total income. So in this particular case, what happens in this scenario, friends? You have found one particular important point, which is about the fact that the charge is on the total income, that total income which is of the previous year, but you compute in the assessment year. And what is the earliest point of time that you can compute a total income? It is the 1st of the April of the relevant assessment year. 1st of the April of the relevant assessment year is the earliest point of time that you can compute your total income. And one important point, students, over here is this, that 1st April of the relevant assessment year you can compute the total income. I told you one very important point at that stage, and that was that the 1st April of the relevant assessment year therefore is considered as the relevant date. Therefore is considered as what? As the relevant date. What is the relevant date? Relevant date means that whatever is the law which is applicable on the 1st April of the relevant assessment year, that law is only will be considered for the purpose of computing the total income and the computation of tax liability for that relevant AY. For that relevant AY. That is the relevance of 1st April of the relevant AY, the relevant date. Okay, that is a point of taxation. A point of taxation. Now, since total income is the point, what is total income? For that, we discussed the definition also of the total income, isn't it? And we learned that the total income is defined under section 2 clause 45. It's defined where? Under section 2 clause 45, and it means what? Means income. What is income? Now, to revise, income means revenue receipt and the specified capital receipt. Revenue receipt and the specified capital receipt. What is second one, students? Second point is that income should fall within the scope of section 5. Section 5. And the section 5 defines the scope on the basis of the residential status of the person. Depending upon the residential status of the person, scope of the total income under section 5 is decided. And as you all are aware that in this particular case, the person can be what? Can be a resident. If he is a resident, then the world income is taxable. And if he is a non-resident, then only two categories of income, which is the nexus. Remember the nexus theory, the connection, the connection he needs to establish with India. And therefore, in that regard, we decided that the two incomes will be income which is accrued or deemed to have accrued in India. Second one is income which is received in India. All these two categories of the income will be coming under that scope. So, income which falls within the scope of section 5 is what is referred as qualified income. And only this qualified income is what we will take it further for the computation in the manner laid down under the Act. And what is the manner? 5 heads of income. Thereafter 5 heads of income. Thereafter the clubbing 60 to 5. Thereafter adjustment relating to set off 70 to 80. It gives you GTI. Chapter 6A, total income. That is the regular way of doing. That is how you will do the total income computation. Apply on that the rate of tax depending upon which regime you are in, primarily the default or in the optional, as the case may be. On that basis, your tax liability will be. I'm just not talking only for the individual part. Okay. Foreign company also I have told you. You can recall for the foreign company rate of tax 40%. Every one of you are aware. But what about surcharge for a foreign company? 2% and 5%. Now that is when the total income is more than 1 crore but up to 10 crore, the rate of surcharge for a foreign company is 2. And thereafter, the rate of surcharge will be 5% if the total income is more than 10 crore. This we have discussed only the rate of tax for a foreign company along with the surcharge part. At this stage, students, the introduction is. Now, do you have, students, any doubt on the introductory part? Do let me know, or else we proceed with. Proceed with what? We proceed with, students. First topic, as you all know, the first topic happens to be the non-resident tax. Any doubt, students? Yeah. So you can always decide which is more beneficial, family and so yeah. Your question is, sir, if I opt for the one question which has been asked classes, if I opt for this default regime, oh sorry, the regular provision, because default regime is default regime. The option you have to opt for the regular. So if I opt for the regular, then is this option to opt every year is available or is it available once? That is the question. Is this option available every year or this option is available once? We'll discuss that when it comes, but still I'll let you answer this. Answer, students, is this, that if that individual does not have any business income, just only for other than business income I'm telling you, since you have asked the question, if the individual does not have any business income, then every year he can opt for the regular provision or decide to be with the default provision. Here's that option. Either he can go with what? He can go with the regular provision or he can go with the default scheme. Every year he has this option. To whom? An individual who does not have the business income. For whom the individual, they have a business income, the position is a bit different. That I will discuss, students, later. Okay? That as and when it will come, I'll let you know on that. Okay. With that, students, let's begin our journey. First topic, NR taxation. Now, first booklet, the print would be in the print by evening. So I'm giving you the PDF, students, right now. The students who are right now in the online part, this context. So hopefully all of you have got the PDF of this particular first module, first PDF, not module, of the first chapter. Chapter number 1, non-resident taxation. The book is a colored book, students. Full-fledgedly 4-color book in there. And it has been used to ensure that you people get this particular aspect. Let's start. As I told you, students, here the first thing for the NR taxation, we will have to focus on what? We will have to focus, students, on this particular part of what? Of the residential status. That I already told you. Residential status, students. Isn't it? Now, in the case of residential status right now, in the examination, students, for CA final, what you will be getting would be for the individual or for a foreign company. For the individual or for a foreign company. Because so far as the remaining person is concerned, that is something like, for example, an Indian company is always a resident, we all know, isn't it? What about for a partnership firm, students? In this case, AOP, HUF, firm. You see this particular box. AOP, HUF and firm, in those cases, they will be considered as what? as the, as what students? You can see this in this regard. They would be considered students in this context only if indeed the control and management of the affair is wholly or partly in India. The control or management of the affairs is either wholly or partly situated in India. This is precisely what has been given for whom? For the HUF from AOP. So in this case, if the control and affair of the management is there in India, you don't have to worry at all. You don't have to worry at all. So in this situation, this particular point, in this particular point, students, part control in India, still you are a resident. Part control in India, still you are a resident. Fine. There is a very important part of the foreign company which I'm going to discuss with all of you. Foreign company. But before I discuss with foreign company, let's first finish the individual part. When the individual, what is the test for the individual to decide if he can be considered as a resident in India or not? What is the test for the individual to decide if he can be considered as a resident or not? So what is the test, students? All of you in this case. So in this case, students, I want all of you to read this part very carefully. There are some heavy amendments. Students, there are some heavy amendments which are being there on this individual part. So I want all of you to read first this particular part of section 6.1 to till explanation A and B. Till explanation A and B, students. Just read it once and then I will go with the case study and you will really enjoy the discourse. All of you get started with this. I hope all of you are through with this one. You let me know. Fine, students. Students, over here, what exactly it is that has been given to us. Section 6, students, what it says, it provides you two basic tests that any individual, that is one of the misconception that many students have. Many students think that, sir, this particular test, is it for applicable only for Indians? There is nothing known as Indians in the income tax law. We keep talking casually, but in income tax law, there is nothing such like Indians and all. Don't say Indians herein. So they have used the word individual. So it means what? It can be for anyone. Citizen of India, not a citizen of India, anyone students. Foreigner, you can imagine Donald Trump, anyone, for them, this is the basic test. And what is that? Out of the two, they need to satisfy any one during the previous year. Which previous year for your attempt? May 24, November 24, 23, 24 previous year. Out of the two, you satisfy any one. And in that case, what happens, students? Then we will say you will be considered as what? As a resident. If you satisfy any one of the basic tests, you will be considered as a resident. So here in India, the emphasis is on the stay purpose. Huh? Be careful. You would have found that to become a resident, the emphasis in this section is given on what? Is given on the stay. Be careful, students. Whereas in US students, the emphasis there you will find mainly it is on the citizenship. Citizenship. There, huh? In India, it is on the stay part. But yes, very recently, there is an amendment where citizenship also would be considered. That amendment you people have not read. I have not told you to read up till now. You only have read it till explanation B. In that, this citizenship has not come. I'll let you know a bit later. That is going to come later on. But right now, the stay in India, if it is, first basic condition is how much? Minimum 182 days. Students, this date that you can see on your screen is what? This is the minimum date. All of you agree to this one? This is what? The minimum date, students. Therefore, minimum 182 days or more. That is the point you have to consider. Point number one. This is minimum 182 days or more. If you stay in India, that individual will be considered as resident. Resident. If supposingly your stay in India is not for more than 182 days, then it's okay, fine. There is a second basic condition, and the second basic condition is this, that if your stay in the previous year 23-24, I will always use now previous year 23-24 because May 24, November 24, it is previous year 23-24. So I will make you habituated to think on that lines. If you're what? If your stay in India is for minimum what? Minimum 60 days in the current previous year 23-24, and in the last four preceding years, in the last four preceding previous year, the aggregate stay is minimum 365 days, then in that case also the individual can be considered as a end. In that case also the individual can be considered as a resident. So students, be careful. This is giving you a second layer. The second basic condition has got two things. One, current year 60 days minimum, and last four preceding previous year aggregate stay minimum 365 days. You will be considered as resident in India. In which previous year? Previous year 23-24. You will be considered as resident in India in previous year 23-24. Is that point clear to all of you? One of the two you satisfy. For 182 days, are we supposed to see what is the stay in the last 2 or 3 or 4 preceding previous year? Not required. To become resident as per the first basic condition, the period of stay the last earlier years has no relevance at all. That is one thing that you should be very careful about it. That be so, students. We are now coming on the explanation part. Explanation, students, if you all see, there are first A, explanation number A. Now you're coming on a very important part. Students. Explanation 1A, there are two things. Which are those two things that you would have seen? The two things that you can see over here in this regard, which you will see over here in this context, is that one is for the citizen of India. Citizen of India, be careful, applicable to a citizen of India. And who leaves India, who leaves India what? Point number one is as what? Who leaves India in this scenario, friends? What they are saying in this context? As a member of a crew of an Indian ship. As a member of a crew of an Indian ship. That is what they have said. As a member of a crew of the Indian ship. You can just do in this, being a citizen of India who leaves India in any previous year, as a member of the crew of an Indian ship. Here, this is I'm writing is point number one. Or point number two. Point number two, what? For the purpose of employment outside India. Students. So, being a citizen of India who leaves India in any previous year as a member of the crew, of an Indian ship, or who leaves India for the purpose of employment outside India. Then what happens? Then the provision of subclause C, that C part, which you will see the second basic condition. The second basic condition, what they say, that instead of the word 60 days, you replace it with 182 days. You replace it with what? 182. Tell me then, instead of 60, in second condition, please pay attention what I am asking the question. The second condition, instead of 60, if I replace it with 182 days, instead of 60, if I replace it with 182 days, don't you think that the second basic condition will lose its relevance completely? Instead of 60, if I replace the second basic condition with 182 days, don't you think that the second basic condition will become irrelevant completely? It will become irrelevant completely. And why is it so? In this case, For the simple reason that first basic condition also 182 days. And in the first basic condition, we don't see the last 4 years. And in the second basic condition, to replace 60 with 182 days, do you think that I will focus then on second basic condition? No, I'll only focus on the first basic condition. Second basic condition, you lose it all the meaning if you have to replace 60 with 182. Because then I don't see then the last 4 years in the first basic condition, and the first basic condition only will be considered. So therefore, what is the meaning of this? Meaning of this is that in this case, the second basic condition will become irrelevant. Second basic condition becomes irrelevant. Condition becomes irrelevant. Hope that all of you are clear with this one. Every one of you. Fine, students. Now, point number B. In this case, students, point number B has got two parts. Being a citizen, be careful. Huh? Being a citizen, here now you suddenly find what? Being a citizen of India. Or a person of Indian origin. Being a citizen of India or a person of Indian origin, within the meaning of this, okay, we will see that section in NRI taxation. There is a topic on non-resident Indian. We will see that later. Please understand, citizen of India or a person of Indian origin, both of them are considered. You say, why both? And also logic. But let's settle down with the provision first. Let's settle down with the provision first. So, point number B is for citizen of India or a person of Indian origin. Within the meaning of this, who is being outside in India, comes to India on visit purpose in any previous year. Comes to India for what? For visit purpose, students. Now, be careful. What happens? Here, in this case, I'll write this as point number 1. And this, which is there in the bracket already, as point number 2. Which is there in the bracket already. I'll write this as point number. Which is there in the bracket already. I'll write this as point number. Is that point here 2? Fine, students. Now, in this case, be careful, students. I'm telling to all of you. Be careful. Students, what happens over here in this context? I'll give you a case study. This case study is applicable to all of you. Now, let's take an example of a student having his attempt in May 23 and who just qualified right now in August, and another student who is going to appear in November 23 who is going to qualify in January 24. Let's take the case study of these two categories of students. First category is for May 23, sorry. Already cleared. Now they are getting, students, a job opportunity in Singapore. The reporting is on 1st of September. These students, May 23, already cleared. Many of your friends also would be there, going abroad now. Therefore, 1st of September, he is going to Singapore, take up his employment there. Tell me then, in current previous year 23-24, is he leaving India for the purpose of taking up the employment outside India? First of all, tell me, is your friend citizen of India or not? Point number A, your friend citizen of India? Yes. Is he leaving India for the purpose of taking up the employment outside India? If that is the case, then the second basic condition will not apply. Only the first basic condition has to be seen, which is minimum 182 days during the previous year. So tell me, when your friend left? 1st September. So in this current previous year, 23-24, what was his duration of stay? From 1st April to 31st of August. To count, initial counting, you have to do it. Later on, you will become expert. You will come to know which is the cutoff date. All these things you will realize later on. Which are those cutoff dates? Actually, have the habit of counting. You cannot go with the cutoff dates. Come, 153 days or 154 days? Rinath? No, I want the days in the total count. First, yeah, students, when you leave India, sorry, the question that is asked over here that, sir, the date when we have left India, that also has to be considered. Answer is yes. So, students, please stretch it till 1st of September. Huh? The date when you have left and the date when you come in India, both dates are to be considered. The date when you have left and the date when you come, both dates are considered. So in that case, what is the date? 100 and 154 students. All of you. The total number of days is 154. I hope that all of you are clear with this. Indeed. So your friend who has left now to Singapore in 1st September 2023. So please tell me, is he a resident or a non-resident? He is a. Is he staying in previous year 23-24 for more than 182 days? Is he staying in the previous year 23-24 for more than 182 days? Answer is so he will be a non-resident. He will be a non-resident, isn't it? So if he is a non-resident, only two income would be charged to tax under the Act. The two income are income which is accrued in India and the income which is received in India. Now, obviously, from 1st April till the result came, he did nothing. He was just waiting. He gave an examination in May. Then he was in the religious trips. And then result came, became happy, did some celebration. Now he is going. So, from April to April to August, he didn't had any Indian income. Okay. And then what happened? He's a non-resident. If he is a non-resident, you all know, only two income is charged to tax in India. Income which is accrued in India or the income which is received in India. Is that clear to all of you? Do you know what your friend did? Your friend tells to you that boss, your friend student, what he is doing? He is telling this case to his boss in Singapore that, look, sir, my parents are in India. My salary is $10,000 per month. $10,000 per month is my salary. But my parents are in India. So do one thing. Out of $10,000, $3,000 you directly credit in a bank, say in Chennai. I'll give you what? Give you my HDFC bank account details. Every month, you directly credit that $3,000 in that HDFC bank account in Nungambakam, isn't it? So in that Nungambakam account, he's putting that amount therein, and then thereafter 7,000 he's so employer gives him 7,000, 3,000 in his parents' account, which is branch in Chennai. That is credited. Therefore, to all of you, this case, this income is accrued outside India. Salary income is accrued outside India. Will it be taxable in India? Will this salary income, will it be taxable in India or not? This accrued outside India? All of you agree. Will it be taxable in India? This example. At $3,000, that $3,000 is going to be received in India. And because that $3,000 is going to be received in India, therefore what students? Therefore, salary income to the extent of 3,000 will be taxable in India. The salary income to the extent of 3,000 will be taxable in India. Is that point clear to all of you? Therefore, 7,000 accrued outside India, received outside India. Your friend is non-resident. Your friend is non-resident. We have seen how he became non-resident. So 3,000, 7,000 has been accrued outside India, received outside India, not taxable. But that 3,000, though accrued outside India, but the fact that this was credited directly the bank account situated in Chennai, therefore received in India, and hence it is taxable in India. And hence, students, it is taxable in India. I hope that all of you are clear with this. Every one of you. So this is how it has to be considered in this regard. So it has to be considered in this regard. Okay. Do you know what you should tell your friend? This is, don't do this blunder, and tomorrow you people also remember this. Don't do this blunder. What you have to tell to your foreign employer is this: that sir, give us the entire $10,000. Isn't it? In Singapore itself, get entire $10,000 in Singapore itself, and then 3,000 you should remit to your parents. Remittance is an application. Remittance is the application, but don't receive directly in. Remittance is an application. Therefore, this is a suicidal arrangement where you are crediting your salary in a bank account in India while you are a non-resident. It is a suicidal arrangement, students, in this case. So, students, in this particular case, this is the first example. I hope that all of you are clear with this. Take example 2. Example 2 of your friend appears in November and this particular case. Who clears in November? But the results is in January. And he is getting the job in Singapore 1st of February. He is getting a job in Singapore 1st February. 1st February 2024. Tell me, previous year 23-24, the number of days of his stay is, how much is the number of days of stay? Obviously, everyone will say more than 182 days. But in such case, better to do the elimination technique. What is the elimination technique? Remove March and remove February. Not entire February, because 1st February would be counted. 1st February students would be counted. So his stay 307 days students in India. 2024, Hanif. Be careful students. See, these are the things. February for all of you. Did you are aware of it or not? February for all of you is 28 days or 29 days this year, 2024. February students for all of you, 2024 would be 29 days. This is the realization. And hence in that particular case, yes. So consider 1st February in, that is what it would be. Okay, that's how it would be. Yes. So total 307 days students. 307 days of his stay in India. Perfect. Now, obviously he's a resident. In previous year 23-24, 2 months salary he is getting. Accrued in Singapore, and he is not going to be full. He said, no sir, give me 10,000 completely. I don't want to credit directly. You give me 10,000 directly, and then I will give a remittance to a parent if I have to give. You give me entire 10,000. So accrued in Singapore, received in Singapore. But is he a resident or non-resident? Resident. What happens? It will be taxable in India. It will be taxable in India, friends. Isn't it? And that exactly the point. It will be taxable in India, friends. So therefore, in this situation, therefore, students, in this particular situation, what will happen? The world income is going to be taxed for this particular person. The world income is going to be taxed for this particular person. Sir, but don't you, sir? In India, you say that 2 months salary that he is earned in Singapore is going to be taxed. But the Singapore government is also going to tax it. These students are saying that, sir, even the Singapore government is going to tax it. Then don't you think that to be a double taxation of the income, where this person will be required to pay the tax in India because he is a resident in India, therefore you pay the tax in India. And what is point number 2? Point number 2 is he is also required to pay tax where? In Singapore. Why? Because he has earned the income in Singapore. Obviously, Singapore government is also going to tax it. No? Singapore government will say, this is the country which is giving you the bread and butter. This is a source. So they will have every right to tax that. There is a nexus already established with Singapore as far as that income is concerned. Singapore government is going to tax it. Indian government, because you are a resident for previous year 23-24, they will definitely tax it. So on the basis of resident, India tax it. On the basis of source, Singapore tax it. Therefore, there is double taxation. Then, how to resolve this double taxation issue? For that, we will be referring to our chapter number 3. Third chapter of this booklet, book 1. You will be learning that particular aspect. Third chapter. Hope that all of you are clear with this one. Right now, we are not resolving these issues. Are you clear with this? Every one of you? Perfect. Now, let's see point number B. Be careful. Point number B, only to the extent of point 1 right now I am discussing with all of you. Students, point number B. Obviously, now your friend, they are in Singapore, isn't it? Possibilities are there. When you left India, when you people left India to take up employment in Singapore, you were a citizen of India. But when you are now coming, your parents are in India. So obviously you are going to visit your parents. But who are you now? You may continue to hold your Indian passport. You are a citizen of India. Or what? You may have given up the citizenship of India. And you may have taken up the citizenship of that country. Now, who is coming in India, not a citizen of India, isn't it? Because you have got a foreign passport to which you are entering now in India. You are not a citizen of India. But can I say you are still a person of Indian origin? Are you a person of Indian origin or not? Although you are not a citizen of India, but are you a person of Indian origin? Now, can I ask you this question? How do you decide that a person is a person of Indian origin? What is the criteria for that? To decide a person to be a person of Indian origin? Either you yourself is born in India, or if not you, then your parents are born in India. If not your parents, your grandparents may be born in India. It is still a sufficient, sufficient uh, criteria for you to be considered as person of Indian origin. Person of Indian origin. Students, I must tell to all of you that here there is this military ruler of Pakistan earlier, Mr. Pervez Musharraf. Heard of his name? So he was a president also of Pakistan once. Military ruler, General Pervez Musharraf. He is a person of Indian origin. So, sir, how can you say that? Why not? He is a person of Indian origin. Even many Bangladeshi people who may have came in India after that 71 war happened. Thereafter, many Bangladeshi, they also came in India. They are also person of Indian origin. Why? Because they may have been born in India, or their parents are born in India, because India before partition was huge. So in that case, we will see before partition theory, and therefore even these people would be considered as what person of Indian origin. And if that be the case, if they all come, who is coming in India? Citizen of India or a person of origin. If they are the one who is coming in India, in that case, for what purpose? Visit purpose to your parents. Now, so be careful. Because it may so happen in one of the year, you would have thought enough of earnings. I came to Singapore to earn some money, but I don't want this culture to be adopted. I want to go to my motherland. So let me go back to my own country. So after earning, after getting the experience, now you know that I've got that experience, I've earned enough money, I can get a very good job in India also. Obviously now India has got also great potential. So with that, you are now returning in India. Now you are returning for what? Visit purpose? Are you now returning India for visit purpose? No. Now you are coming for permanent settlement. If you are coming for permanent settlement, in that case tell me, will you still go with only first basic condition? Because point number B says what? Point number B says, be careful students, point number B says what? You see, being a citizen of India or a person of Indian origin comes on a visit to India in any previous year, comes to what? Visit to India for any previous year. The provision of subclause C, provision of what? Subclause C shall apply in relation to that year as if for the word 60 days, 182 days has been substituted. So students, can I say the same thing over here? Can I say the same thing students over here? What is the same thing? That is perfect. First basic condition, only the that is only the first basic condition. Is the first basic condition. That is for point number one. Only the first basic condition will apply. Only the first basic condition will apply for point number one. Only the first basic condition will apply in this. I hope that all of you are clear with this one. Every one of you. That's exactly the point. Okay. This is what it is. Students, one highlighter also you will keep it up. The book that time. That's the way I'm highlighting it. You also will highlight. Students, in this context, only first basic condition, all of you agree or not on this particular point? But now you tell me, but you have, who are coming in India for permanent settlement? Now you said it, now I have to live with my parents, with my own country. I cannot leave this foreign country for rest of my life. So what happens now in this case? Will only first basic condition will be applied? No, you are not coming for visit purpose. If you are not coming for visit purpose, then again both the basic condition which basic condition 182 days in the current previous year or 60 days in the current previous year. Then the last four preceding previous year minimum 55 days in aggregate. That point all of you. All of you are clear with this one and that point. This is such an important particular point. Very, very careful. Such an important point. Fine, students? So, please understand, when you are leaving India, you are a citizen of India. When you are coming for visit purpose, you may be a citizen of India with Indian passport, or you may be what? Having a foreign passport, given up Indian citizenship, and taken up the citizenship of that foreign country. Then in that situation, students, then in that situation, you will be considered as a person of Indian origin. So visit to see both. Either you are a citizen or you are a person of Indian origin. For both of them, this has to be. Now, very important amendment has happened in the finance years back. 2 years back, friends, very important amendment has happened. What is that amendment? We will see now, students, this. I'll first give you a particular chart, students. You will copy down this, all of you. Individual. This is for individual who is citizen of India or PIO. Comes to India or visit for. Comes to India for visit purpose. That's clear to all of you. How you ask the question? What is the question? Whether whether total income, whether the total income, including the income from the foreign sources the foreign source need rupees of 15 lakh. The answer can be yes or it can be no. The total income, just can you insert the previous year? You write yourself, previous year 23-24. Make it specific. The answer can be yes or it can be no. If it is no, then the individual will be considered as a resident, if he stays in India, for minimum 182 days the previous year. And 3, if the answer is yes, careful. Then previous year 23-24, if anyone the basic condition is satisfied. What is that rule? Stay in India for minimum 182 days in previous year 23-24, or the real game. Stay in India for minimum 120 days in previous year 23-24, plus in India for preceding what? Past preceding or previous year for an aggregate minimum stay. Aggregate minimum stay of 365 days, bro. Is that point clear to all of you? Right below this, the individual becomes resident because of this basic condition, this condition, this basic condition. Then by default, he will be considered as RN NOR. This is very important. RN NOR. Since be careful. What I have told you, you may be aware of it. Your IPCC also, that if you have to be considered as an ordinarily resident, then there are two additional tests which you have to satisfy. There are additional tests that you have to satisfy. Now, students, these two additional tests, what are they? That we'll see tomorrow. Okay, that will be discussed later on. But if you, for the individual who is satisfying what? This basic condition. Who is satisfying this basic condition, students? Because of this basic condition, he becomes what? He becomes a non-resident, resident. In such particular case, what we are going to say? He will be considered as a resident and what? And not ordinary. Will be considered as a resident, but not ordinary resident. I hope that all of you are not clear with this. Every one of you. That is the point. Therefore, from this covers up this particular important part, which is R and NOR. Now you may say, sir, why they have done this? The logic of it, isn't it? Since you know what many people did? This is actually targeted super rich people. Because what happened was, surcharge rate, your total income is more than 2 crores is how much? What you? Your total income is more than 2 crores, surcharge rate is 25%. The notes itself you would have written. If the total income is more than rupees 2 crores, then the surcharge rate is 25%. Isn't it? Similarly, the total income, student, is more than rupees 5 crores. More than what? More than rupees 5 crores. And under the optional scheme, the surcharge is 37%. Isn't it? Students, these surcharge rate, 25%, are known as super rich surcharge. Super rich surcharge. I told you already earlier that we have to tax on the basis of the ability to pay. You have to tax on the basis of what? Ability to pay. So you should tax that person more who is more able to pay, bear the burden. You should tax that person more who can bear the burden of tax, isn't it? Therefore, a rich and the super rich class of the people are the one who bears the major portion of the tax, and that is through the route of surcharge. Which route the government is collecting additional tax? The route is surcharge route. 37% is very huge. These super rich people thought that it is difficult, but savings coming at a stake. You know what these super rich people started doing? Super rich people then decided to leave the country. But obviously they have good substantial presence in India because many for them citizenship. Like I was reading just 2 days back, uh, and there's a situation in Phuket. In Phuket, if you make an investment of this much, say of 2 crores of investment, they will get a residentship there. Something of that sort is there. Many countries have got this scheme. You become resident. You can have a home and then you go and then stay in that country. Then what happens? Because see the proximity with India, it's very near. You can easily come in 3 hours flight. You can keep on coming. 3 hours flight. You can keep on coming and going, as if that you are in India itself. But very systematically, you people are doing it. What you are doing it? 181 days only you are staying it. So you will say that I am coming in India for visit purpose. And if you are coming in India for visit purpose, only the first basic condition of 182 days. But you stay in India. Do you know how many days you stay in India? 181 days you stay in India. Why? Because you have your economic interest in India also. You cannot leave India economic interest. So 181 days you stay in India. Say for example, Monday to Thursday you are in India. And 4 days you are in India, 4 days you are in Bhutan. That is how you are living your life. So, but sir, traveling cost, what traveling cost? Person with having a super rich person, 10 crores or so, in that case, for him, ticket 10,000 rupees only he has to pay. Sometimes 8,000 rupees tickets are there. Tickets fare is not that very high in that case. Unlike you have to go to US, then that's a different story altogether. But this ticket rates are not on that higher side. That is what I'm trying to tell to all of you. What happens then in this case? So in this particular case, student, what happens? Therefore, you all are aware now. So going and coming in this situation, he 181 days he stays in India, manages business, and the beauty is that so by being a non-resident, whatever he earns in the foreign country, whatever he earns in the foreign country, he does not allow Indian government to tax it. Whatever he earns in India, definitely that Indian government is taxing. But whatever he earns in the foreign land, in this case, whether the government can now tax it? No. Why? The non-resident. 181 days. That's where the government thought enough. Enough of its nonsense. These people, 181 days, effectively they are staying for more than 50% in India. So what the government did? This case, government said that now you stay here and then show me. Because they what they did from 181, they slashed it down to how much? 100. See the huge drop. 60 days means 2 months gone. And now you cannot keep coming India for some serious activity. In this case, for 120 days, it's very less time. Earlier, 181 days, more than 50%, like 50% time you can be in India. Good time for controlling your economic activity in India while enjoying your foreign income, which is not getting taxed in India. Because you are a non-resident. So government did it, then let's do this one. If your Indian income is more than 15 lakhs and you are coming in India for visit purpose, then your visit can be tolerated only up to less than 120 days. The moment you touch 120, when your Indian income is more than 15 lakhs, the moment you touch more, how much? 120. Then that is it. plus last 4 years, 365 minimum. Then who are you? You are a. This was introduced just to ensure that the people who were trying to cover up their Indian business by coming in India frequently for 181 days and ensuring that the Indian economic activity is pursued while while allowing their foreign income untaxed in India. Why untaxed? Because you are a non-resident. You are staying in India for 181 days. So while continuing to enjoy the economic benefit in India, you are not allowing your foreign income to go untaxed. What the government did? Fine. Why we should tolerate you that economically you are having so much of good presence in India, you don't tax your foreign income. In that case, let's reduce your criteria now. You are having an Indian income of more than 15 lakhs. You are having an Indian income of more than 15 lakhs. You will now have the basic test of how much? How much? 120. The moment you touch 120 days, and in the last four preceding previous year, aggregated 365 days, you are a resident. And RNNOR. RNNOR. By default. This is what it is. This was introduced for a reason. That exactly the point was. I hope that all of you are clear with this one. Fine. So this covers up students your resident status in this case. Tomorrow there are some more particular part which is there, which I'll discuss in tomorrow session. We'll be wrapping up this, and then we will also enter into the resident status of foreign company. Okay, so tomorrow students, individual, balance part, small part is there, and the foreign company is what we will be discussing in the tomorrow. Bye students. Okay.